Welcome to Let's Chat. I specialize in helping people sell their lawn and landscape businesses. This is the show where we talk to other lawn and landscape owners, talk to professionals in the industry, whether you're looking to sell your business or looking to sell your business in the future, or do you just want to improve your lawn and landscape business and maximize its profit, this show is for you. If you like the content you've been seeing, please smash that subscribe button, like, and please comment. I'm really excited today because we have with us Diana Miller-Lloyd, who specializes in doing due diligence once a deal gets under contract. How are you doing today, Diana? Thank you so much for joining.
Good morning. I'm doing well. How are you?
I'm doing good. I am excited to have you on. I'm excited to share with the audience kind of what you see with a business once it goes under contract, what the seller can expect during the due diligence process. So maybe we can just if you can give us a quick overview of your background and what brought you where you are today with due diligence.
I'm a forensic CPA, and I've been doing this on my own since 2010. I've helped companies to sell, buy, expand their landscaping business all over the nation, as well as locally. I help the businesses go through due diligence process so that there is a transparency, buyer's confidence, and no surprises at the end of the day for the buyers.
That's fantastic. And I really appreciate that intro of yourself, Diane. And what I really want to get across to the audience today is that if you are looking to sell your lawn and landscape business, and you go to the market, once a buyer submits an offer to you and you've executed that agreement, meaning that you and the buyer have both signed either the LOI or the asset purchase agreement, the buyer is going to have their opportunity to do due diligence. And a large part of that due diligence is the financial due diligence, the legal due diligence, to see if the business really is what the seller had been claiming up to that point. This due diligence process can last anywhere from 30 days to 60 days or longer. And that's why I'm excited that Diana's on, because if you are thinking about selling your business, the due diligence process plays a huge role in the process. And this is the opportunity for the buyer to decide, yes, this business is what has been claimed to be. And, the due diligence process is going to basically end in three ways. One is that everything looks good. We move forward. Obviously, that's what you as the seller, me as a broker, and the buyer want to have happen. Or things don't really crack up to what was being said. The buyer has the option to walk away, or the buyer has the option to, renegotiate and try to renegotiate the price or the terms or anything that make them feel better going through the process. So, on a national average, 50% of all business deals that go under contract for a sale of business falls apart before it gets to the closing table. So that's 1 out of 2 deals is estimated fall apart. So that's why I think it's so critical that if you're thinking about selling your business, that you have a good understanding of what you can expect as a seller through doing the due diligence process. And if you're a buyer and you're thinking about buying a lawn and landscape business, this can kind of give you an insight of what your CPA, or if you want to hire, Diana as a forensic accountant, would be doing during the due diligence process. So, Diana, maybe you can share, what due diligence, why due diligence is such a critical step on your end. I think I've kind of covered it on my end, but is there anything else you wanted to add?
Absolutely. The critical part of the due diligence is the transparency and being upfront with the buyers and having all the ducks in a row, such as having their financial statements, tax returns, and other affairs in order, so that they're able to have no surprises. And if there are surprises, that's where things get tricky, and there are red flags that makes the deal go difficult or fall apart. Like you said, every second deal nationwide falls apart because of those particular surprises that they have. But if the business owner is smart enough to start early on in the due diligence process and work with a professional of their liking, whether it's their favorite forensic accountant in the area, or they contact me, I would be happy to walk them through due diligence and show them that it would make it the work easier and transition easier if they start early.
Yeah, that's great. And I usually suggest people that, that a lot of CPAs, forensic accountants, buyers, they want to go back 3 to 5 years. How far back do you go back,
I
Diana?
go back to 5 years back because it shows a cycle. However, very often the businesses exist only 2.5, 3 years. So since the inception, the business owner should actually have paperwork ready and show if they all of a sudden decided that they no longer want to be an owner, they go on and want to sell it. The preparation should start from day one.
Yeah. So right now, if you're listening to this and you're thinking about selling your business in the next couple of years, yeah, I experienced anywhere from 3 to 5 years. Diana goes back 5 years. So if you're thinking about selling your business in the next couple of years, you really need to start thinking. I know it sounds strange, but you need to start thinking about the due diligence process now and preparing yourself so that you're ready for that due diligence process. And Diane, I don't want to get too in deep with you because you know this, but if you're looking to sell your business, make sure that you have your tax returns for several years. You know where they're at. Make sure you have your bank statements, your merchant service statements, anything financially related or legal related. Hold on to that right now. I know that a lot of business owners are, oh, I'll just throw that away. I'll throw that away. Hold on to all your documentation for everything, from now until you're ready to sell, so you all have it in place. Diana, you were talking about surprises. What surprises or red flags do you see, or most commonly do you see in the due diligence process that you can kind of warn a business owner of, hey, this is a heads up. This is what I see the most often, and you need to correct this.
So there are a few things. One of them is having books that are not aligned with tax returns. Tax returns are made to be showing lower income, whereas the actual financial statements show a higher income. So there are discrepancies there, and it's important to have them being equivalent. It's hard to do because of the gap, general accepted accounting principles, and the taxation. They don't have a common language that they speak on. However, working with a professional who knows those differences can smooth out that transition, that the tax returns and the financial statements, they go hand in hand together. Also working with preparing the financial statements with the integrity, like having depositing cash, very often can be a red flag if they don't deposit it. And what happens is they claim that the value of their business is higher. However, it's hard to prove it because they are taking cash, and cash is untraceable. So it's important to trace it back or show the contracts that were received by checks, by credit card, and start recording the cash on regular basis and as often as possible, even transferring into the merchant services where they accept credit cards, even if there is a nominal fee to pay for the merchant services. That's just one of the two examples. Another example is the claims that happen with errors and omissions for the landscaping companies. If there is something that goes wrong, that a slip and fall, or they cut the grass incorrectly or plant something incorrectly, there could be a claim against them. I've seen it happens rarely, but I've seen that happen.
Hmm.
And those claims need to be settled ahead of the time before the actual sale of a business takes place. It's hard to sell a business when you have open items, dangling around.
Yeah, any legal issues that that pop up, whether you are being sued or you're suing somebody else, those legal issues need to be addressed and taken care of fully before you can take your business to the market. No buyer wants to step into, in the middle of a lawsuit and acquire your business
Exactly.
and be dealing with that situation. So definitely, and I want to kind of expand on what you were saying, Diana, because about the cash, because I see the same thing. Is they're like, oh, and I take X amount in cash every year, and da 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 da, and that is untraceable. If you're not reporting it, you're not including it in your financials. You might as well kiss that goodbye, and you could say, well, I get 30,000 or 50,000 every year in cash, but if you're not reporting it,
It's
you're not
hard
going
to
to see it.
prove it.
It's hard to prove that, and you're not going to realize. And it's not just you feeling comfortable with it and the buyer feeling comfortable with it, but if it's if we're looking in a enterprise value where that business is going to sell anywhere from $500,000 to $4 or $5 million, there's going to probably be an SBA lender involved, and they can't buy into it. So you got to do that. And I want to go one step further. This is what I see all the time, and this is probably the biggest thing that I'm yelling from the rooftops, Diana, is that business owners tend to run a lot of personal expenses through their business, so that they don't pay taxes.
Personally.
And, I want to encourage you that even if you're not looking to sell your business, you should stop doing that. I mean, there's legal ramifications, things like that. But I'm not here to judge anybody, and think anything bad about you if you're doing it. I've been helping people sell businesses for nearly 25 years. I've seen a lot of different things. I'm sure you've seen a lot of different things on your end as far as people writing off personal expenses, but that's probably the number one killer in my eyes when a business owner calls me and says, I'm ready to sell my business. And, I start talking to them and they've got $150,000, $200,000 of personal expenses in the business that we're never going to be able to add back, and they're not going to see the realization from that. Outside of pricing the business too high, I think not having good financial records is the number two biggest reason why businesses do not sell. And I know that if
Absolutely.
you're listening to this, I know I don't want to hog all your time, Diana, but like if you've got a business and for every dollar that's a personal expense or cash that you're not reporting, you might be saving, if you're in the highest tax bracket, you might be saving 37 cents on that dollar. But when you go to sell your business, you could be losing out on $2, $3, $5, $7 or more on that same dollar that you're trying to save 37 cents on. So you're trying to save change in taxes and you're losing out big time on the back end. And I know people are listening to this like, I'm not doing, I have to pay so much more in taxes, blah, blah, blah. First of all, you should be. Again, I'm not here to judge. But two, if you want to sell your business, you want to make sure you sell it. You want to make sure you get the maximum sale price and you get the best terms possible. That is probably the single biggest advice that I could give you. And I'm sure, Diana, that's probably the single biggest
And
advice
I
that you can
agree,
give
yeah.
somebody too, right?
And also, the way to avoid not exactly pay taxes, but there are legal ways to be able to put stuff in retirement and other vehicles that they have to work with a professional financial advisor for these things that can show them this is the right way to go about. Rather than just expensing all the personal expenses on their P&L, profit and loss statement, and
And there are good
paying less
strategies
tax. There are good
strategies for that,
exactly.
Diana, to get the best of the both worlds, because we can't add that back as a broker, and lenders are going to add that back as well. Legit retirement type programs that are set up to save on taxes. I'm so glad you brought that up.
Yeah, absolutely.
So let's go back and maybe we can talk a little bit more in depth in what financial records or documentations Alana or landscape business owners should, have on, start to save and have on file if they're looking to sell their business.
Well, I would start with the equipment, the records, because landscaping businesses are very big in the equipment arena. I would keep invoices of all of the equipments that they have purchased, and the contracts that they have, created with the whomever they're buying it from, the equipment, creating depreciation schedules, keeping a very clear logs of that, which goes on the balance sheet of the financial statement, having all of the accounts receivables, a good log, in investing in a very good accounting software system like QuickBooks or Xero or any other ones that are FreshBooks out there. There's millions of software solutions that help that, and working with the qualified bookkeeper would be a good way to go about it, so that you keep track, especially if businesses are in for starting with $5 million and up. They need to have the accounting software and not keep things in the Excel spreadsheet, and keeping books all together and preparing the snapshots and KPIs and all different types of reports. So one of the reports that I look at is the income statement, statement of retained earnings, as well as the balance sheet, statement of cash flows. These are the basic financial statements that I need to be prepared on a monthly basis for any type of business, actually, and landscaping specifically because they have a lot of activity that takes place. Recording their cash transactions, recording their merchant transactions, and working with the right type of people so that their business is held, is being led from point A to point B on the right path. Also, their payroll records, because they employ a lot of landscape professionals. It's important to have payroll records as well, and having any outsourced, if it's a small business, outsourced HR person who would be coming and complying with the rules and regulations of the state that they are in.
Diana, that's some really good information. You threw like a lot of great points in a very short period of time. I appreciate that. Some of the things that you mentioned on, I just wanted to expand on, like you were talking about, go out and get yourself a good solid bookkeeper. And I agree with that. A lot of times the spouse is doing the bookkeeping, which is fine, as long as the spouse is doing the chart of the accounts right and they're doing things properly. Because I've seen things where the spouse has done the books and they've done a fantastic job because they really know QuickBooks, they really know bookkeeping. But I've also seen situations where it makes a mess of everything because they're putting things in different expense categories all the time. They don't know how to do things properly, and things are all over the map. And if you are thinking about selling, I would hire that accountant to do it. And you also talked about AR, and one of the biggest things that the buyers will ask right out of the gate is, what's the aging on the accounts receivable? How hard is it to collect the money? And if you've got clients that you're constantly chasing down that are months and months and months before you get your money, you may want to start firing those clients. Buyers love when you're like, yep, I have very little issues. I mean, obviously you're always going to have that one homeowner or something that's going on where they're going through a little rough patch. Maybe they get a little bit behind, and as human beings, we want to, we want to be okay with things like that. But if a lot of your accounts you're having a hard time paying or getting paid by a lot of your accounts, you need to take a good look at your accounts, because that is one of the first questions a buyer is going to ask out of the gate is, how easy or how hard it is to collect on the AR.
Yeah.
They're also big thing out of the gate is, what's your retention rate year to year? You keep an 85-90% of your clients or customers, or a turn mill where you're losing 50% a month. And one last thing, you touched on the employee situation. This is huge in the lawn and landscape space, because sometimes you have, and this has nothing to do with politics. This has to do with the realities of what buyers are going to be looking for and banks are going to be looking for. If you've got employees that you're paying under the table, they're undocumented or anything like that, buyers don't want to take that risk at all.
That's what makes it difficult.
Yeah, most buyers will be like, oh yeah, you got all these people you're paying under the table, or they're undocumented. They're gonna be like, yeah, I'm not gonna take that risk. And you as the owner could say, well, you can run it however you want, but first of all, they're gonna probably lose a lot of employees right out of the gate, and then they have to turn around and immediately recruit, hire, and train those employees. And they're gonna be like, wow, why am I even buying a business? Because all that should already be in place. And if you're looking at your numbers and you're paying them under the table, or you're paying them 1099 when they should be paid W-2, obviously the costs involved with turning them into legit W-2 employees is going to be more than what you're paying right now. That's probably why you started doing that to begin with. And that's a cost that's going to affect the buyer. So that's probably another huge thing, is make sure that you've got a good workforce that's legit and,
Yeah,
you know,
and working with
W-2.
professional like HR professionals who are fractional HRs, human resources administrators, they guide you in order for you not to have any fines. Very often when you pay people under the table, Department of Labor comes in, and what they do is they fine you per person.
Yep.
And that becomes a legal battle. So the money that you thought you saved is actually comes out. So it doesn't make sense to do it.
Right, right. Well,
And
let's
hope
move
for the
on to
best.
legal, a little bit more into the legal. Is there anything else that, do you touch on legal considerations? I know that.
Absolutely. I touch on legal considerations. I ask my when I do a due diligence, I ask for to be transparent with me and let me know what are the legal ramifications they have. They may have contracts that they are disputing. They may have contracts that are in litigation and they were promised one thing and now there is another. It, you know, with the terms and conditions of landscaping when they do landscaping big jobs for hospitals, for example, for large institutions, financial institutions, and so on and so forth, or they have even governmental contracts. So those things are important for landscaping companies, and because longevity of the business depends on having viable contract. It's not just simple homeowner. There are corporate contracts that you can have as a landscaping business.
Yeah.
And if you're on that scale, then there should be the bidding process for the government or even a financial institution that will award you this contract. You have to have all the ducks in a row as well. They do due diligence ahead of the time before that happens, before they award you, because they don't want to take a liability.
And those contracts are a huge part of what you're selling. So you need to, understand, are those contracts, can you assign them, and can a buyer assume those contracts? And that comes into a large play is, is this going to be an asset sale where the new owner is going to set up their own corporation and buy all the assets and goodwill of your corporation, including, not buying, but taking over your labor force, taking over the name of your business, taking over all your equipment, but they're also going to be taking over those contracts. Can be done that way. And a lot of times it's like, it can't be. And, it has to be a stock sale. It might have to be a stock sale where they're actually
That's
buying the
right.
stock in your corporation in order for them to be able to take over your contracts. But you got to make sure there's no clause in those contracts that say that, they cannot, if there's a majority change in ownership, blah, 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 blah. You just got to make sure that it's not saying anything in those contracts that you have with your customers and clients that would prevent that from
From
being
happening,
transferred
yeah.
over to a new buyer.
Exactly.
Another thing I see too with legal is if you're the type of lawn and landscape business that deals with a lot of chemicals, are you abiding by all the rules and regulations when it comes to storing and handling those chemicals, and make sure that you are? You're not in a position where the local government or the state doesn't like the way that you're storing the chemicals or whatever. You got to make sure you do
Or
that,
disposing of them too.
or disposing of
Disposing,
them.
yes, disposing of it is a big part of it, because when businesses transition, they tend to dispose of the chemicals, and if they don't do it right, the fines can come in, and it would be transferred on to the new buyer,
Yeah.
and that could kill the business transaction at the end, or that could create a post-sale litigation.
Yep. Yep. Is there anything else with legal before we move on? I mean,
I
there's a
think
lot
we
with legal.
covered
Any of the
there
top
is a
stuff?
lot, but yeah, we covered pretty majority of the legal right now.
Yeah. Yeah. I think we have too. Do you get into systems and processes or technology or anything like that,
Absolutely.
Diana?
I get into systems and processes and technology, like, they need to everything today is on the cloud. To have a cloud, you need to have the right IT, information technology company that would make sure that everything that, from books and records to logging in your employees to payroll services and everything like that works correctly. And as a result of it, to be able to get to afford your own IT person is not always viable. So having an an IT company that is a fractional IT, outsourced IT, is very important. Working with, working with the right professionals in the IT, and they are the ones who are working with all of the bells and whistles of the system that would cover being either compliant with the rules and regulations and having a firewall for the computers and their even iPhones, iPads, the billing, and maintaining their systems overall. So they are the ones who do. A good IT company would do also the white hat hacking, and that is a service that they offer for the client to see if it does a penetration test. And I usually request that from the IT company to see whether or not they're doing what they're supposed to do, and then they're not just collecting every month for their ongoing subscription for their services.
Right, right. Okay. What are some things that some tips, things like that you can give to a seller so they can better prepare for the due diligence, whether it's legal, technology, financial?
I would say that a good tip is to work with professionals early on. It's a first and foremost thing. Seek for help, because by yourself it's very hard to do. Somebody who is in landscaping business is not an IT professional, information technology professional, and not an accountant, and not a bookkeeper, and not an attorney to be able to do all of the contracts and negotiate everything. So what they do best is cut grass and operationally do provide landscaping services. The reason, if everybody focuses in what they do the best, and ask for help, especially early on, that would be very helpful for the diligence process, to be transparent, to have the books reconciled on monthly basis, and sitting down with their accountant on monthly basis and going over what their revenues and projections and KPIs look like. That is, to show whether business is growing or is not growing or is stagnant. It's only one of the three things. And what to do, how to get out of those situations if they're stagnant or not growing. If they're growing rapidly, that's great. Let's keep going. What are we doing right? Let's fine tune the Ferrari and keep going to the next level until we decide that we want to sell.
Yeah, a lot of things that you're talking about, Diana, those are things that whether you're looking to sell or not sell, it's just best practices of running a business, and you're probably going to run the business smoother. It'll be easier for you to run the business, probably be less stress, if if you implement these things. So even if you're not looking to sell, it's just good practices as a
It's a good
business owner.
practice. Yes. It's
Yeah,
easier to run the practice if you just ask for help early on.
right, right. And that's part of it too, is like, I I get calls all the time from business owners, and it's great. When a business owner calls me like, yeah, I'm ready to sell now, I get excited for them. They're like, yeah, I'm excited. I want to sell now. And, I got my RV. My wife has already retired. We're going to travel the country. And I love hearing their dreams and what they want to do post-retirement. And I think it's fantastic. But sometimes, more times than more times I like to see, I'm talking to the business owner and, they're ready to retire right now. And I'm looking at their financials and I'm asking them a bunch of questions, and I'm like, but I don't think you should sell now. You're not ready to sell. They didn't kind of take the steps that we're talking about. Some do. They don't, they don't talk to me and you or watch the video like this. They're just running their business a certain way, and they call me up and they're ready to sell. Great, move forward. But a lot of times I'm talking to a business owner and it's like, oh, you're not going to be able to sell. And with only 10 to 20% of the businesses for sale actually selling, that's a national average. That's not my average. That's a national average, which is horrible. 80 to 90% are not selling. Like, Diana, you were saying they should probably reach out ahead of time. They should, like, I do, like, whether it's me or somebody else, that does what I do, talk to them, a couple years before you're ready to sell. I call it a seller assessment call where I just ask them a lot of questions, client concentration, their role in the business, talk to them about their financials, legal. I just kind of go through a list. It takes about an hour, and, it gives me a good understanding of, hey, these are the things that you should address before you go to the market, so.
And the value of a business goes up from that point. If they have all of those things in a row, all their ducks in a row, and they have good financial statements, and they have been doing everything right, their business value, when I evaluate the business, goes up.
Yep.
It's not just discretionary earnings. It's also their contracts and recurring revenue. There are a lot of factors that come into play to make the business value for fair market value to go up, instead of looking at something that is very your discretionary earnings are this and that's it. Like
Right.
I've seen in the industry, and they don't look at anything else.
Yeah, so it's not only about let's not make your business, the 80 to 90% of the businesses that are not going to sell. We want to put you in a position not only going to sell, but we want to put you in a position where you're going to maximize your sales price. And you're going to get the best terms possible and make the business as attractive as possible to potential buyers. So,
Exactly.
is there anything else that we may have missed besides, we touched on legal, financial, technology? Is there anything else? And I know it's tough because we're taking what you do that it takes a long time to do a due diligence. We're kind of boiling it down to a short webinar, but is there anything else that kind of is a glaring type of a situation you think people should prepare for?
No, I think we covered everything very well, in this, even though short period of time, but nonetheless, we were able to get very good outcome of what they should be looking for. And if, let's say, one last thing that I could say, and if they didn't take away anything, I would say reach out. Reach out to the people who would be helpful to you.
Yeah.
To run your business, to increase the value of a business, and make it happen.
Yeah. And, Diane, I think it comes down to, if you're feeling like, I really shouldn't be doing this. This isn't right. I know I'm not supposed to be doing it this way. That probably means that you need to fix it and change it, whether you're running personal expenses through the business or you're not reporting the cash or you've got employees that are not, employees on the books, whatever it might be that's in your business, you need to just bite the bullet and change it. So anything you're sitting out there going, I really shouldn't be doing this, from a legal reason or that's an indication that probably needs to change.
That they need to change. And if they started out in the way that they didn't report things correctly, I would say go back and redo the books. Start working with the an accountant to go back and redo the books and provide a transparency type of financial statements.
Yeah, I sometimes get like a business owner and be like, well, I can prove all this. I can prove all this, all these personal expenses. I can prove it. First of all, a buyer does not want to go through, your chart of accounts, which is 3 inches thick, and look at every single expense and start, that's a $50 personal expense. That's a $20. They're not going to do it. The lenders aren't going to do it. Big private equity groups don't want to get involved with that. I mean, it should be glaring when they look at your financials, how the health of your company from a financial perspective. And they shouldn't have to dig deep to try to figure that out. It should be kind of glaring at them across the page. And again, I know that increases the tax situation, but like you said, there's other ways that you can work with financial planners to reduce the tax situation. And, you're saving pennies on the same dollar that you're going to be losing dollars on when you are ready to sell. So just bite the bullet and do it. And then also keeping all the information, keeping your documentation, keeping your, using a bookkeeper, keeping your P&Ls and balance sheets from month to month, and your tax returns and bank statements and merchant service statements, your contracts, keep your servicing for all of your equipment. You had mentioned earlier about equipment, Diana, and I almost forgot to say it. Like, not just the receipts that you bought it, but like keep track of like when you take your trucks in to get serviced, they get an oil change. Keep all that information. It can't hurt. Some buyers may ask for it, some may not, but it's just keeping that information.
That's
I don't think
right.
you need to keep, maintenance records for your 2-cycle equipment, your trimmers and things like that. I mean, that you burn through that and within a year or two. So I don't think that's important. But the big assets that you're maintaining, keep those records.
Absolutely. Absolutely.
So Diana, yeah, because you dig deep. You're a forensic accountant. You're not your neighborhood
That's what we
CPA.
do. Yeah.
You're there to do due diligence for people to make sure the business is a good business for a buyer moving forward. Is there anything you want to leave a seller or a buyer of a lawn and landscape business with?
I would say also reach out to anybody who they need to do. I would just repeat that. If they don't know anybody, please reach out to me. I will be happy to assist on any level that I can.
All right, excellent. How can they get in contact with you?
Well, they can go on my website, which is forensic.com, and reach out from there. Or they can, send me an email or call me. And my information is on Google Pages
All right,
as well.
excellent. And we're going to have your information up on when we put this video live as well. Diana, I really appreciate you joining us today. Thank you so much.
Thank you for having me.
Absolutely. Well, if you like the content, you want to make sure that you keep seeing videos like this, please subscribe to our channel. And I would love it if you commented and get, ask Diana some questions. I'll pass it on to Diana and get those questions answered. And make sure you like. Well, until next time, have a fantastic day. Thank you very much.
Thank you.